afternoon, traders. Good Friday afternoon to you all. I've been bombarded over the past probably 10 to 15 days about questions regarding crude. Now, crude, as you know, has not been on any kind of DB watch list. In other words, we don't have the advantage of some sort of trend in crude. So it's not a pair, or I should say it's not a Forex market that it's going to end up on our workflow, but it's a 4 extra, right? It's our futures market contracts that have a tremendous amount of influence on some of the pairs that we'll watch. Case in point, our dollar loonie or our CD, our Canadian dollar. All right, so for the most part, for those of you that are wondering, balancing Forex scans with futures scans, we're going to do a whole lot more 4 extra future scans. In other words, what is gold and silver doing? What are bonds, notes, the Dow, crude, natty gas, copper, lumber? Those markets that are often going to give me insight into what I may see happen to the calm dollar personality or the risk environment personality of our currencies. There's really no separating it. So why not trade it if you're going to be monitoring them anyways? So again, crude oil has not been something on my DB watch list. It's not been something that I have been watching as a big impact on crude, on the loonie, because crude right now is moving for geopolitical reasons. It's a panic move in crude. And oftentimes you'll notice that the loonie simply doesn't benefit. It doesn't strengthen when crude oil is not moving higher on growth reasons. Take a look at the move here in the CD contract. Take a look at the move here on the dollar loonie. It simply does not benefit from those types of panic geopolitical moves in crude. And let's not forget, let's be fair to the loonie, right now the dollar is just going into the stratosphere, or at least poking at the stratosphere anyways, in terms of what's happened with this morning's non-farm payroll. So there are some near-term US dollar-based reasons that the loonie can't muster any strength, and a lot of that has to do with the greenback. But my point here is to take a look at crude oil because, again, I've been getting a lot of questions about it. I'm not going to send out a lot of general notes on something that I'm not trading necessarily actively, but for those of you that have been sending me emails, and we've been going back and forth, about a few dozen of you all, regarding crude oil, and I thought, you know what, this might benefit the group at large, so let's go ahead and record a video here. And this doesn't just pertain to crude oil. This pertains to, one, any market that's not on our DB watch list, in other words, it lacks a daily trend, but two, is in play for one reason or the other. Okay, so there is an organization of sentiment and momentum, but not necessarily a trend yet. Okay, so we'll transition this conversation over to the euro as well before we're done here. What do you do with a market like this? What do you do with a market like crude? You know, it's a difficult thing in a chop to say that crude is going to hang on to the 200 period simple moving average here, although the fact that we could not put any space between the 200 and crude was certainly somewhat bullish, but I don't know that it'd be a reason on its own to just get long crude. You know, we weren't able to really put a lot of distance. Emily, what is a lot of distance? $1, $2 a barrel? Another thing that made this fade, which is really what it was, very difficult is, you know, you're looking to pass lows. Where has crude reacted before? And you see there is just a tremendous amount of variance between some of these lows down here and some of these highs here, giving us a wide range within which we could fade crude. So your crude fade could extend really all the way down to probably about 91 and change. So to say that this is going to be the sole level that crude will be bought at is a difficult thing to do. Now, once Egypt became the fundamental reason for this, which it absolutely was, now we're getting a little bit of U.S. equity strength as well. But really, Egypt was the panic move that pushed this thing higher. Now, what's unusual again is the fact that crude's moving higher and the US dollar is moving higher, because typically in an environment of true growth, the dollar would be sold, the Dow would be bought, and the weaker dollar would, in part, rally commodities, and the weaker dollar would also reflect a risk-on, risk appetite environment. Well, the Fed and in the years of QE now and the taper expectations that have been ratcheted into September have absolutely dropped that correlation of those contracts on its head, literally. So with a good jobs number comes a stronger Dow, and the Dow's already made, talk about summertime low volume, the Dow's already made a triple-digit rally, a triple-digit move back lower to basically unched on the Dow Jones Industrial Average, back up to a triple-digit rally, and now we're sitting here in lunchtime up about 93 points. So when I see that my Dow's moving higher, my dollar's moving higher, and crude's moving higher, this isn't really part of a typical correlation. So what I want to explain is, for those of you that were saying, wait a minute, where did this move from crude come from? In a word, Egypt. So don't kick yourself over this kind of move being somewhat untradeable on a daily. Where do you retreat to? And I say retreat for a very important reason. Where do you retreat to when there's no DB? I mean, go back to our typical guidelines. I don't want to commit to a longer term time frame, right? I don't want to commit to the 240. I don't want to commit to the 60. Unless there's a really good amount of clarity here, usually my focus is going to be 5-15-30, which lets me stay nimble. This applies to the US dollar. This applies to the Euro US dollar. This applies to any of the pairs and futures contracts, or 4 extra, that don't have DB. So I then retreat to the 5-15-30, looking for clarity there. What this also allows me to do is be nimble. I can get in and get out. So how do I get in and get out of pairs and futures contracts like the CL when I don't have DB? You look for, on the short-term time frames, one of our 3 core entries. What are our core entries? I look for swing entries. I'll look for momentum entries. I'll look for trend reversals. Remember, distribution fades are always aggressive, and it's not part of our core 3 core strategies. If I know that I have, from a fundamental standpoint and from a momentum standpoint, and really it was much more a fundamental standpoint, because it wasn't until we really breached 99 and then $100 a barrel that this really started to gain more and more traction. But let's say early on, when we hear about the Egyptian unrest, and then we say to ourselves, well, what could this do to crude oil? Because that was really the link you kept hearing happen in terms of blogs and financial media, whether it be online or television. So you just say to yourself, well, I don't have really clarity here. We could exhaust at 99 or 100, but I want to take advantage of the bullishness. You have bias. It may not be directional trend-based bias, but you have momentum bias coming from that organization of bullish sentiment, all that bullish thinking based on the fundamentals, which ultimately turns into momentum. It just hasn't organized enough into a trend. So you go to your 30-minute and you say to yourself, do I have a Momo? Do I have a swing? Do I have 12 to 2 o'clock angles? And do I have 3 o'clock angles that I could set up swing buys and breakouts from? You absolutely do. I mean, there's 2 sections here that already triggered it, back in here and then back in here, which preceded this move here. Okay, so you don't want to take this reversal here. You don't want to take a breakdown because you have bullish bias. So you're really approaching the short-term time frames with a bullish bias, waiting for your setups, whether they be swings or whether they be momos, in order to get you long, but nimbly long. In other words, you don't want to be in a position to have to necessarily take this overnight, or in a position to have to wait for a tremendous amount of follow-through to hit at least an initial profit target so you can ratchet up your risk-based stop to a break-even. Now, on the subject of stops, if you haven't already, I emailed out a podcast for today talking about risk-based, break-even, and trailing stops, the thinking behind each one, and how we use them. And that's a big part of intraday trading as well. So we're staying nimble. We're taking it session by session. Same thing with the US dollar for that matter. So when you're saying to yourself, well, what can I do with crude today? Look to the 5, 15, 30. Look to stay nimble. The strategies that you're going to employ on the 5, 15, 30 are going to be generally the same things you're going to employ on the 60, the 240, and the daily. The only exception really being the 5, where you have the luxury of possibly entering based upon the between the greens and shallower pullbacks if you really want to take more of a day trader approach to it. So in that case, what you're going to want to do is insert, and let's go ahead and I'll show you how to do it right now. You want to insert the moving average, exponential moving average, and this one is going to be, there you go, the 13 based upon the close, and I'll usually paint this a lighter shade of green. And then you also want to insert another exponential moving average. This one's going to be at 21, and it'll be a darker shade of green, hence the between the greens. I mean, literally between the greens. There we go. And you make this one darker and 21. And there's your between the greens. So that's what you're looking to try to take advantage of. All right. And if you want to change the way they look just to make it easier, you know, I don't know if you want to make them dashed, whatever you want to do, whatever's going to make it easier for you, make that change on your charts. There you go. And you can see we've already reached between the greens twice here at the shallower 13 EMA. So the 13 and the 21 are, if you want to liken them to a longer term swing, would be similar to the 20 DMA and the 34 EMA high in an uptrend. That's kind of the way you're treating these. So think about being a day trader. Think about being nimble. Think about how you can follow the movement with an overall bias, but doing it intraday, because I don't want you committed to the longer term. We can't justify it. I'm not going to break the rules just because we have a fundamental reason. I have to see the clarity in the price action. Case in point here, Euro US. Let's take the same approach. I'm not going to change things just because we're jumping from our 4 extra futures contracts now to our pairs. What's the individual currency story with the euro and the US dollar? They are two ships passing in the night. Okay, so I have a fundamental basis for expecting more downside in the euro, whether you want to take advantage of that on an EC or the euro US dollar is completely up to you. It's the same setup. Okay, the EC is really a de facto euro US contract traded on the CME. And of course, then you have the option to go to the spot with the euro US dollar. So what's the plan here? Well, what's interesting about the euro US dollar is the potential for a bounce. And I'm going to look at this as an opportunity. I think that this 128 handle is going to be way too enticing for some bottom pickers to pass up on. And that's fine, because it's probably going to create the bounce that some euro US dollar sellers want in order to short from a better level. I don't know that many traders would want to go into this short with the weekend approaching. I don't know that many euro US dollar sellers are convinced that we've seen all the profit taking from today's unbelievable move in the dollar index. So I want to keep that in mind as well. I think there's a pretty good chance that we could see some profit taking in the US dollar. Although ultimately I think the dollar is going to reach for more highs. I think a lot of traders are looking for an 8 to 10% rally in the dollar, which would actually pressure, and that's a huge move, gang, by the way. I'm talking about, we're talking a significant longer term trend, but that would absolutely put traders and a lot of the market's mood focusing on the 120 handle. You know me, I'm not going to talk about 800, 900 pips from now, but you're going to start to see more and more talk about the 120 handle in the euro US dollar. We just have to break some levels first before that even comes into focus. But in the short term, I think there could be a small bounce, which ultimately is going to be sold into. And do you want to do that on the daily? Absolutely not. I know there's chop here. I don't have DB. So what am I going to do? I'm going to go to my short-term time frames. I'm going to go to my 30-minute and look for swing shorts. I'm going to go to my 15 and look for consolidation or swing short. So you have a bias of overall a downside target, an overall downside trend, and then you want to wait for those opportunities to nimbly short the Euro US. I would actually make exceptions for the 30-minute chart for the 60-minute chart in this situation. A really good amount of 4 to 6 o'clock clarity with some near-term resistance levels. I wouldn't be surprised for this market to retest this area in here, which ultimately would put, and let's zoom in on this area a bit, shall we? But it would ultimately put 128.72 to about, basically 128.80 to 129 handle in focus. And if that's the case, we're going to see, I think, a lot of sellers pile in at levels that were near-term breadcrumb resistance levels just not that long ago. We may not even get up that high, to be quite frank. We could just make it maybe to here, which would have us stepping in at about, let's talk about what that level would be. This would be 128.68. So this would actually put 128.50 into focus. Okay, so you ask yourself, what does 128.68 mean? Well, these are near-term lows, so what was once support would then now, looking forward, be resistance. But at the same time, that puts both the 128.50 and then the 128.80 level as, from a price action momentum standpoint, but puts both those levels into focus. But what I want you to come away with here is, if you don't have DB, and you know that certain pairs are in play, or that certain individual currency stories are in play, and you lack directional bias, it's the same thing as going counter trend on a chart where there is overall DB. Okay, you go nimble. So crude oil is going to be played that way. British pound US dollar can be played that way. Euro US dollar can be played that way. Go short term. I know a lot of my charts are still focused on the daily where we have trends, and that's where the clarity has been. But day to day, session by session, you could find shorter term opportunities, especially in some of these names that are absolutely in the headlines. Dollar, gold, copper has been moving. Obviously, individual currency stories are pairs. So I don't mean that you should start focusing on charts that have a lack of a trend, lack of DB. That's not where I want you to focus, but I realize a lot of you are seeing these headlines roll. They're not necessarily in pairs that have DB, but you want a piece of them. This is how you do it. I'll see you in the next video.